Hi everyone. I wanted to go over some of the homework in Chapter 3, specifically the construction of these different statements. We've done a little bit of this before, uh, but it's good practice to go over it and especially pay attention to the methodology used to fill in the different blanks. In this case, with Nickel Corporation, you're being asked to create a single-step income statement. Single step means there's not going to be any cost of goods sold or anything like that. We're able to just put revenues, expenses, and come up with net income. A statement of retained earnings, balance sheet. We'll get to that later. Let's just focus now on the first thing it's asking us to do, uh, which is the income statement. Pay close attention. It says list expenses in decreasing order on the income statement and show total liabilities on the balance sheet. Well, look, don't worry about two financial statements at the same time. Let's just focus on the income statement right now. But it says on the income statement, list expenses in decreasing order. In other words, dropping, 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 dropping. So when you come over here and pull your adjusted trial balance, if you remember, the adjusted trial balance is the net balance that's in all the T accounts. So the way the 15,000 got in here is at the end of the cycle, at the end of December 31st, the T account where we're adding debits to the left side and lowering cash by crediting cash. The great giant total is a net of 15,000, and that's put on the adjusted trial balance. Um, what we're trying to do here is we're trying to pull the information that's relevant so we can fill out our income statement. Notice I've already filled out a portion of it here. Let me close this down temporarily and scoot down. You notice I've already filled out a portion of it. I put in revenue, picked revenue right there. The only kind of revenue they have is service revenue. The way you can tell is up here you have the balance sheet accounts, balance sheet, stockholders' equity, and then when you come down here, you notice that there's only one kind of revenue, service revenue. If there was another kind of revenue, you'd see a credit here. You know, these are not revenue accounts. Has nothing to do with the income statement. This has to do with liabilities, and it has to do with stockholders' equity. So this 92,600, we're going to stick it here. And then we have salary expense. We're going in decreasing order from higher to lower. Is 4,300. Rent expense is the next one going down, is 10,500. Insurance expense is 3,700. Interest expense is 2,900. And supplies expense is 2,800. And then the lowest expense we have, and pay close attention here, it says except for income tax. So list expenses in decreasing order on the income statement. We're on the income statement, except for income tax. Income tax is special, and it's put on a line all by itself after after we do our revenues and expenses. Depreciation expense is the lowest one. It's 1,500. If you add all of your expenses up, you come up with the magic amount of 61,700. And what you're doing now is, let me close this for a second. What you're doing now is you're creating a line called income before tax. Notice income tax expense is waiting right here. Uh, Income before tax is going to be obviously service revenue, which is the only revenue we have, minus all the expenses, which in this case equals $30,900. Interest tax expense is given to you. It says right here, come down, income tax expense, 6,500. So it actually tells you what it is, which is kind of handy. Okay, net income, of course, is going to be income before tax minus income tax is net income. So 30,900 minus 6,500 is 24,400. What this does with the laying out of the service revenue, which is the only kind of revenue we have, put it back up here. Notice the focus was down here at the bottom where all the revenue and the expense accounts are. With the picking up of the service revenue and all of the expenses in decreasing order, except for income tax expense at the end, we come up with our magic amount of $24,400. I hope you found this useful. I wanted to just kind of go through it and emphasize some of the important details about, descending expense amounts, how you set income tax expense by itself and alone. In other words, you don't mesh it into the rest of the expenses. Keep in mind, income tax expense is something that's dictated by income tax policy, by the IRS, wherever it is you happen to be operating. So what they try to do is they try to put the expenses that have to do with the business here and an income tax expense by itself because it's really related to kind of a legal tax code. And that brings us down to net income of 24,400. Your numbers, of course, will be different, but I hope you found this useful in terms of how you structure a single step income statement.